In this final lesson of the A Step in the Right Direction course, we are going to be focusing on level refinement. This will provide us with more accurate levels and provide clarity on our charts. So, there is a level segregation which exists, and it exists between the daily time frame and the weekly and monthly time frame. Now you are going to continue to mark your establishing regions through your swing low and high of moves on the monthly and weekly time frame. So nothing is going to change there. So let's just mark out a few of those levels. We have the monthly swing low, the monthly swing high, the monthly swing high, the monthly swing low of the swing high candle. Just here we have established that we have 4 monthly levels, and we can just see how well these levels are respected. Level is created here, you come down, you hit the level, you pull back off the level because it is resistance. Then you break through the level, and what do? You then use that level in the future as support, as you can see, before coming up to hit this level and then pulling back, breaking that level, and again, just like this level was down here, it is then used as support. And you know, if you was to continue this on, up here, you could simply mark this swing low level, or the high of the low, sorry, and look at the level of respect here. So, again, we know our levels are well respected. Now, you would go into the weekly time frame and you would do the exact same. You would continue to do that. However, the segregation exists between the weekly and the monthly and the daily. So, from the daily downwards, you are now going to refine your levels. So if we use the replay tool, we can just kind of cut back to this section here, and we're going to actually remove all the levels on our chart, and we're just going to focus on the daily time frame for now. So if we were using that same method then on the daily time frame, we would naturally come in here, we would mark the swing high as resistance, we would mark the swing low of the high candle, we would then find the swing low of this move, which is here, and then we would mark the swing high of that low candle. And as you can see, in this small space here, we've actually developed 4 levels. Now, if you think about that, if you was to mark all of these levels out across all of these swings, you are going to get some serious chart congestion. So it's our job now to refine this and make our charts more precise, more accurate, and more clean. So then actually, when we come to make trading decisions, this is going to be easier. So the change that we are going to look at is you are going to be only marking swing high and then the swing low of the move, okay? And what that actually does is it allows you to really refine your valley. So when we think back to peaks and valleys, you know, you have this peak that moves up here and then the valley begins here. So obviously if we came all the way up here and create that kind of perfect peak and valley, you know, if the move went all the way up here, you would create that perfect valley. Now what that allows us to do is it allows us to create and generate a zone that we live in. Just like if we now go to the next move where we move this down, price comes down and it creates a new swing low here. It then moves up and it creates its swing high here. So we now live inside of this zone. So rather than having 4 levels, we just have 2. We focus on the swing low and the swing high. And again, you would go into every swing still. So you could mark this swing low, because obviously there's a swing here. This is the swing low. And rather than marking the swing high of that swing low, you just come to the swing high. And actually, this is a test of that previous level. So you wouldn't mark a swing high there. So for a moment, you actually lived inside of here before you broke out of that region. And then if we just mark a few more levels, you end up creating a new swing low here. And then you would create the new swing high up here, like so, which you end up first hit rejecting, first testing, and then you move over it. And then in the future, you end up creating this swing high up here, which again is respected. So as you can see, we've created a nice, clean and concise chart now, and it allows us to dictate what zone we live in on that daily time frame. So you can see for actually a large percentage of these daily candles, and this is a long space of time, this is from September the 3rd right the way to November the 30th. So a long period of time. Now, what does this actually look like to you just looking at this? It looks like an accumulation zone has been created here. So actually, once we break out of this region, we may see a move up. And this brings us on to the next section of this lesson. However, before we look at our next concept, just to reiterate that the reason we continue to mark our levels on the weekly and monthly as we have been, so the swing low and so we have the obviously the gold for our monthly, the swing low and the swing high is because of the gap that this establishing candle creates. So on the larger time frames, you are likely going to create a larger gap between the top and the bottom of the establishing candle, and therefore the levels don't run into each other like they would, or like we've seen on the daily and below. So that is the reason why we go into the daily time frame below and begin to refine our levels. So if we look at this chart now, we have two potential targets. We have this resistance up here. So maybe we'll change the colours of these, what are now resistance. We have resistance and resistance. Now we know the daily levels, but just for visual purpose of this lesson, we're changing them to be, just so there's some discrepancy there. So these could be potential targets. We have a resistance level here and one at the top here. And obviously, if we break this resistance, it's likely we're going to head to the next target because we have space in between this. Because we've created this zone here. Now, this is a nice time to state that the more levels that you create on the way down, the more levels that then you have to break on the way up. Now, you can see in here that we've kind of created this jagged S-curve where we're up, we're down, we're up and down. And that is because we are constantly swinging and creating new levels of support and resistance. Hence, we are bouncing around in this region. And obviously, breaking up trends, like obviously you would initially had a trend here from this swing high to this swing high. You know, you break that trend, you move up, because obviously ignition comes in and momentum comes in once you break trends. But because of that, you are getting a lot of swings. Now, actually, if you break this blue resistance here, it's likely that you're going to head straight up to this top level because you don't really have any other levels in here. Now, you may have a few lower time frame swings in here. So on the smaller time frame, you may have maybe a 4-hour swing high. But in general, you can see you have clear space. So we can play this out and we can see what occurs. So we're living in this region down here still. So we're in here. We're still holding this region. And we begin to move up. Okay, and now we've first hit rejected off this level. Now we're testing it. It's likely now we can break that level and head to that blue level. And that's exactly what we do. Look, we hit that level of resistance. We pull back. We use this level of support before going after that level again. And now you first hit rejected. Now you've tested the level, it means you can break that level in the future. And look at that, exactly what occurs. Look at what we do. We head straight up from this point all the way up. Now you can see in here that we mentioned there's going to be a potential level in here. And you can actually see there was some type of, here you can see there's some type of respect in there on that lower time frame level. But actually we created all this space in here. So once we actually break this level, it shoots us up to the next level. So that is something really important to understand there. And you can see it as clear as day now where you had this distribution, you had the move down, and then you went into this long accumulation period. Once you broke out of that accumulation, you moved up. So again, that is tying in with accumulation and distribution there. And we can see that the more levels that we created in here, the more price had to work to break those levels. Hence, it needed that time to actually break those levels. So that's a nice lesson then on refinement of levels, and you will be doing the exact same on lower time frames. So just to end this lesson then, we are going to focus primarily on time frame setting our levels. Now, what we can do is we can actually play this out to see what occurs. It's likely that you're probably going to pull back at some point and maybe use this level as support. So what we'll do is we'll change this back to red. Probably going to use that as support. And you do. Look at that. Perfect. Use the level of support. And then let's see what occurs. And you move up in a big way. And again, just like where we spoke about this gap here, the reason the price pushes up here is because it has no binding. It's just, moving up. It's following its uptrend. There's no levels up here to stop it. There is no trends from, back here trying to stop it. So actually, it's unbinded, and it means that it's going to look for likely a psychological level or a very different type of trend of the past, which we won't go into just yet. But we're now going to look at time framing our levels so they're visible on the correct time frames. So if we remove all drawings and go into the monthly chart, what we are going to do is when you are marking your monthly levels, so say your monthly swing low, you are going to double click your level and you're going to set the visibility to all of the time frames, and you're going to do the exact same for the weekly. But once you get to the daily time frame, so let's say you have your daily high, you're not going to have your daily high, and let's actually mark a few more. So we said that we have our swing low here, and we also ended up creating our next swing low down here. So as you can see, these are daily levels, but when we go out to the monthly or the weekly time frame, these levels just look very random and they don't really help us when we look at our monthly chart. So what we are going to do is reduce the visibility and take them off the monthly and the weekly chart. So the daily levels are going to be set to show on the daily and below. So really important. And also, when you are marking now your 4-hour levels or your 1-hour levels, you would take them off the daily time frame. So if we go into, you know, the 4-hour time frame and just pick an example of this and just start marking a few. So for example, we have a 4-hour level here. So let's just make it that teal color. We have a 4-hour level there. Just make sure it's visible on all time frames, just so we can see the example. And then we go out to even the daily time frame. Now, obviously, this is actually a daily level, but in reality, if you was gone to the weekly time frame, this level just looks so random. It looks like it's in the middle of a candle. So it's not relevant to see this time frame level set on the weekly. So, for example, a 4-hour level, you would have showing on the 4-hour and below, like so. You'd have it showing on the 4-hour and below. If it was a 1-hour level, you'd have it on the 1-hour and below. Because there is no point having these lower time frame levels shown on these higher time frame levels. The only levels which need to be seen on all time frames is the weekly and the monthly, because they have such strength. And this goes the same with trends. So that is how we develop an understanding of what time frames our levels need to show on. And this creates our nice, clean and concise charts. So that is the final lesson on level refinement. Now in the next course, moving beyond the game, we will be delving deeper into understanding the charts. We will be looking at more advanced accumulation distribution, even further refinement of our levels. We'll be looking at more accuracy of trends and the way they adapt. We'll be looking at ways in which we can see whether a level is gained or lost across all markets. So that will be our next course, moving beyond the game. Hope to see you there. Hope you've enjoyed a step in the right direction and it's helped you to make better trading decisions and to truly understand the science that runs these markets.